All right, it is Wednesday, January 7th, and here are the markets I'm trading. So starting off the SP500 today, you can see right over here, there are a couple trades I got in. And so the main way I'm trading right now is I'm drawing when the price is going up, you draw the Fibonacci Retracement trades from the two bottom semaphores. When it's going down, look for it down, you draw it from the two consecutive top semaphores. When it hits a green line, that's your entry. Purple line is the exit right there. And as you can see right here, there we have it, drawn those two. Hit it up right there. It's just been kind of waffling right around today. And so right now we have a good entry spot. So I'll probably look at getting in this when the market opens back up. But if the price comes down and hits the black line, which is just the zero line of the Fibonacci retracement, then I'll look to get in. Had probably two contracts right here, and then the exit's close to the green line up here, which is the 261.8 Fibonacci retracement level. So that's what we're looking at going into tomorrow. We are looking at a long going number right there. If I get in right here, not sure if I'll look at taking it all the way up there, all the way about right up here, although that's 58 points, which would be nice. But I might. So we'll just have to see what's going on. But it is looking like a good long opportunity right here that I will look to get into going into tomorrow. For the Russell 2000, not a whole lot going on right here. We do have a potential really long setup doing the red semaphores right here, but we need it to go a little bit more higher for us to get in the trade right here. You can see it's up here is the green line where we'd be looking to get in, and then the purple line is the exit area right up there. But as of right now, there really isn't going anything on in the Russell 2000, so not much more to talk about there. For the Dow Jones, kind of the same thing right here. Not a whole lot to talk about right now. The short trade already got hit using the red semaphores, the consecutive semaphores up here. You can see this is a trade I took today because you can see right here, it hit right here. That's the entry. Then the exit is the purple line. I never take it down all the way to the complete exit. I always get out a little bit earlier for it because I got out here at 49539. Well, that was a right. Where did I get out? 49. I don't know. Did I get out right there? That's a terrible way to get out. I don't know. Somewhere over there. Anyways, what does that say? I can't even see what that says. Anyways, got out somewhere along this bar right here for that one right there. But anyways, there's not a whole lot going on for the Dow Jones. At the moment, I was looking for a potential long trade using that semaphore and that semaphore, but you see it never went up there and hit the green line for it. So nothing going on right here for the Dow Jones going into tomorrow. For oil, I'm a little bit of a quandary right here. I think I messed this up, so may have to take a loss tomorrow depending on what's going on. And because I was using that semaphore, see price came, got me in right there. That's fine. Started going up to the purple line, didn't get hit right there. Then it hit the zero line right there. And then instead of, I was looking for go just a tad bit higher to get right for that green line, but that may be as good as it's going to get here for this trade right here. So I may have to relook at this and not when it hits the green line, get out, a little bit even sooner before the exit would be the green line. When it hits, when it hits the black line, get out sooner before it hits the green line right there. So I got in again right there, didn't get out, which I should have got out right there. Got in one more contract here, one more contract here. So this is kind of like the end point area for it tomorrow. If the price goes down much more here in oil, I'm just going to get out, take the L right there for this trade, but that's the way it goes sometimes. For it, I think I did miss the exit, but right here, but we'll see what happens going in for it. So this seems like the safe way to do it. Get in somewhere where it hits green line initially. If it does come back, hit the zero line, get in with two contracts there or double the amount of contracts you have right there, and then just have your exit, at least, let's see how much this was. How much did it go up? So this is going to be 61, and then that is going to be, how much is that one? 8, so probably somewhere about 12% lower than the line right there. So if we had 0.61, so 0.6, probably about 0.878, and probably 910, so probably about 15% lower than the green line right there would have gotten us out. So we'll see, but I'm expecting it. If this is, because I'll show you why I think this still may be good. This is just an extreme case of it going against me, because I'll show you in the Nasdaq here in a second what had happened previously for it. So we'll see, but it's hanging on. Luckily, these contracts aren't too much. They're just micro contracts. I got 4 of them right there. The exit I have is just below the zero line right there for it. So yeah, we'll see tomorrow what's going to happen with oil. And then in the Nasdaq right here, this is the reason why I feel it still may be an all right trade, because in using the top Semaphores, looking for a short, you can see it hit right here, never hit the purple, went back up, hit the 0 line, hit the 100 line, and then came back and hit that. But as well, it did come back up, hit the 4.236 line the opposite way, and then came back and hit the 0 line. So that's what I'm looking for. You can see it even went a little bit higher than it right there. So I am looking forward to come back and hit the 100% line right there. But if I did miss it and it starts just for oil tomorrow, if it just keeps on going down, down, down here, then I probably will. If it breaks this and goes much lower than the 685% Fibonacci extension level, I'll probably just take the L, get out of it right there, and that's the way it goes sometimes. But coming in for, that was the old Nasdaq trade right there. And yeah, going into tomorrow for Nasdaq, we are in a good trade right here. This is one I will look at getting into when the market opens back up, using the red semaphore, and there's a next red low semaphore. We did have an entry right here, and the market came and retraced back down. The reason why I didn't look to get in right here is because, as you can see, here is yesterday's and here's today's. Whenever you're getting that big run up right there, you can look for somewhat of a pullback for it to come back before it continues back up, and that's exactly what happened today. Came up, it broke it to new high, and then we had that pullback back to yesterday's high right there. So of course there are some days when the price breaks the previous high and just skyrockets up right there. I call that a blowout day, but today this typically happens more often than not. You break to a new high up there, runs a little bit, and then comes back closer to the previous side of the day. Not necessarily right to the previous side of the day, but it does retrace back a little bit before it starts back up again. So we'll look at taking it right there, looking at, here's the exit way up here, the purple line way up there. So, you know, if that does come up and hit that, that would be a 2.16 move for tomorrow. But if price does continue to go back down, hit the black line, let's get right there, have the exit just slightly above it right up there for the two micro contracts right there for NASDAQ. So that's what we are looking for tomorrow. Going into the NASDAQ. Silver, here's another pretty good setup we have for silver right here. I've been trading, as you can see, lots of trades right here over in silver. Nothing in it right now just because silver has just crazy margin. I mean, it's like double everything except for the NASDAQ. You make some really good money or lose a ton of money really fast from it right there. But using this red semaphore and that red semaphore, here's the original entry we have right here. And for silver, I rarely ever, unless it's a smaller move, take it all the way up right here just because there's so much money to be made just in these small moves from it right here. So there is the original entry right there. You can see price has not come back and hit the 0 line right there. When it does that, the exit is, you know, somewhere closer to the green line like we were talking about, or like I mentioned for oil. I'd probably have the exit like right around here just to ensure I get out of it. But right now, when it opens here, I'll probably have just a limit or just slightly below it, because pretty much every time I get into a trade, it always goes against me a little bit. So I might as well just try to get those couple extra ticks for it right there. Get into it, and then just probably looking at pocketing somewhere between, assuming it does go up, pocketing $1,000 to $2,000, which would probably be somewhere like right over 1, 2, yeah, somewhere like right in here, something like that for it, for silver. But if it does go back down, looking to get in another contract right here, and then once it breaks back up, and look to get out for a profit up there. So that's what we have for silver. So as you can see, there's a lot of long setups that we are looking at going into tomorrow, because pretty much today the market, and it wasn't down a ton except for silver. Silver has been just moving a ton. Silver is just every single day for the past almost 2 weeks, it seems, just huge highs, huge swings, huge highs, huge lows. And then we have gold. This is a trade I currently am in with gold right here. So we can see using that semaphore. Oops, that was wrong. That didn't mess me up. Yeah, it did mess me up. Great. Okay. Well, I just missed that one. So we'll see what if I would just want to take that loss right there, $80 loss, because as you can see, I had the if I can grab the dang thing. There you go. I had it set up right here, so it showed that that was an entry. You can see that's where I got in right there, but really it should have been right here, me not paying attention for it right there. So I may just get out of it right there just to be safe, because you never know. And yeah, but that's what we'd be looking for if price comes up and hits. If it does come up and hit it where it's where the entry is, that'd be it right there. That'd be the entry for gold, and then the exit is up here at the purple line right up there. Market's closed, so it won't change it right there. But yeah, that's it. Or I may just put another contract to get in right here. If it's down there, then look to take a little part right here. I'll just have to see what's going on for tomorrow. But as you can see, for gold, we broke to new high, then broke to new low. So it was just a engulfing day today. But anyways, so those are the trades, and that's it. Thanks. Bye.